Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. The opinions expressed in the program by the host and the guests are their personal opinions only. Remember, feel free to subscribe and share with like-minded friends. My name is Deryck. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gaur, Managing Director of State Street Digital Assets. Good morning, good afternoon, good evening, wherever you are in the world, and welcome along to the last episode of Beyond Bitcoin for 2023. And along with me today is my friend and colleague, as always, Nitin Gaur. Hello, Nitin.
Hey, Deryck. The year flies by. A lot happened this year, which we'll touch upon as a year in review, but really glad to be in this journey with you, Deryck. And I believe we have another special guest today. We'll talk about their projects and where we're heading. So looking forward to this last but meaningful conversation for the year.
Indeed. It's been a fantastic year to be working with you, Nitin, on Beyond Bitcoin. It's always a joy to learn, and I hope we've managed to educate and support the industry itself in the various guests that we've had on and our various views. So before we get on to our guests, let's put the year into a little bit of context in regards to what's happened to the market. And that, of course, is that you've seen, the market cap currently on coin currency charts is sitting at 1.57 trillion. This same time in December 2022, when you and I were doing a podcast, it was sitting at 810 billion. So it's gone up close to 100% during that period of time. Bitcoin, of course, is trading at $43,200 US. Ethereum's up at 2,243. I mean, these are substantial growths from what broadly was a low of about $15 and maybe $900 through the year. So we've seen the benchmark CCI 30, which we use as a fund, as a benchmark, when we benchmark the Portal Digital Fund and the Radiance Fund against, it's up about 15% for the month, and it's up 95% year to date. And by the way, year to date's getting damn close to annual 12-month period of time. So I thought might take this moment to look at a group called Sigmund, who we've met with a couple of times in Zurich over a period of time. And they are doing an institutional investor survey report on an annual basis to measure what the instos are thinking about the year ahead. Now, we read often of what the more crypto native are looking at the year ahead, and the crypto natives, of course, are very excited about the year ahead. They're very bullish. Their view is generally that there's nearly 2 years of bull run ahead of us. But the institutions, they're a different tribe. And so it'll be intriguing to see what they think. So it was interesting to note that nearly 40% of the institutional investors planned to wait for their investment to come through in regards to sort of the first half of 2024 rather than in the last quarter of 2023. 60% of all investors who were surveyed said that they think there's going to be a solid positive upswing in 2024. So I found that really quite intriguing. And the deployment then being in the first half of the year. The majority of institutional investors see crypto as an opportunity to participate in expected market upside, as well as a safe haven, a strategy for hedging against traditional markets. Oh, wow, Nitin, haven't we come a long way when they're defining it as a safe haven? 24 months ago, it was far from their definition.
Or as Larry would say, flight to safety. Our friend Larry, Uncle Larry from
Uncle Larry from BlackRock. A flight to safety, bless him. And so really attitudes have changed. And a lot of the institutional investors still, however, are focused on what they understand. And that is single token exposure, mostly around Bitcoin, a little bit around Ethereum, because they can understand how to access ETFs, how to get that on their Bloomberg screen, how to get exposure to the marketplace. New trends are interesting though, because the demand for tokenized real estate they're arguing is higher than the demand for venture capital, art and collectibles combined. So early stages of tokenization of real-world assets, but we've always said that this asset class is going to consume these big asset classes like real estate by virtue of reflecting their value in a tokenized manner. A lot of our listeners are from Singapore, and they'll be pleased to note that 75% of the institutional Singaporean respondents intend to increase their crypto allocations in 2024, with 78% of this saying they intend to do that within the next 6 months. So I think overall you're seeing a general trend of those in the survey that institutional looking at 2024 as a period they wish to deploy to the space. They have confidence in its continued growth. And I think the takeaway is the concept of a safe haven. So, Nitin, we're talking here about traditional institutional investments. It's ironic because our guest today is really developing a protocol to disintermediate or to democratize investment in this space. And so, Nitin, would you introduce Sri Misra for us?
Yeah, and I'll provide my narrative as well. But it's interesting because Sri Misra, now a good friend, I actually met him in Consensus about 2 years back. This is ideal crypto conferences. You meet amazing, interesting people. He was sitting right next to me, and we got to chat about the industry. And I believe Sri, it was Caitlin Long who was on the stage, who actually used interesting expletives for the Federal Reserve because she had her application pending. And so we got to talk, and he was just talking about his, at the time, concept. And 2 years later, he has built this amazing DeFi asset management platform, which we'll discuss in detail, of course. So Sri, welcome to our to Beyond Bitcoin, and we'll go deeper into what Arna protocol is, which is essentially, as I mentioned earlier in my introduction, this DeFi asset management platform. But to add on to Deryck's sort of perspective, Deryck, a year in review for me, I broadly, as I'm engaged in the industry from my day job perspective, but also as an industry professional, I broadly classify this into 4 different categories, right? We've seen institutional embracing crypto, and this is not just from the funds and the growth in funds globally, but also ETFs. So ETF has taken the lion's share of the conversations and quantum of investments that's expected to come into the industry. Second thing I think is, second broad bucket is around regulatory and supervisory action. So this is all the lawsuits against SBF and Celsius and Daquan being extradited to the US and looking into Binance. All these were sort of enforcement actions that global bodies of regulators, primarily led by the US. So to me, that is a significant chunk of energy that's gone into dissecting where things went wrong and deciphering between what's right, what's wrong, what are the regulatory boundaries that the existing regulation covers. And which to me, while it didn't move and the needle a lot, it actually provided a lot of, consumed a lot of energy, but also provided a lot of clarity for a lot of projects who are trying to debate in terms of where they stand and what is the action they can expect. And the third sort of category I would say is a regulatory framework and clarity. And as much as we talk about on this show, Deryck, and we got tired of talking about regulation, we saw MiCA in Europe being passed. We saw WARA in Dubai provide some clarity in the UAE ecosystem. We've seen MAS pass some of the regulation and many projects which were experimenting with some of the protocols that the likes of Sri are building for the industry. So there was a lot of work, and we also saw the India presidency of G20 provide clarity, the FASB on accounting of. So these are, to me, are very positive regulatory movements in the industry, which I think will only help us contribute to the growth in 2024 as we expect. And the last thing I would say, which is where Sri comes into picture, is new projects due to market correction. The builders had a lot of energy and time, and we had a lot of crypto tourism move on, and the real builders who stayed back. We had Coinbase had Base built on Arboretum, and you had many such chunks of these projects. Now we begin to see Bonk, which have taken the crypto universe by storm. So you see many of these sort of projects come to life, which were sort of dormant or being built. With that, I'd like to move on to Sri. Sri, tell us more about Arna protocol, and I do have some follow-on questions as we like the audience to know about protocol. Tell us about your vision, how you stumbled upon this industry, as we introduce you and your project to our audiences. But I'm really, really curious because I've always looked into layer 4, and we'll describe that to our audiences in a minute. And I always am looking at who are the Amazons and eBays of this industry as they're evolving, taking advantage of all the lower level protocols. So with that, Shri, welcome to our show. Tell us more about your experiences, your journey, and Arna protocol.
Thank you. Thanks, Nitin. Thanks, Deryck, for having me on your podcast Beyond Bitcoin. And yeah, it's been an absolutely packed year, like you guys said. So many things moved on slowly, but if you look back and in hindsight, it's just packed with so many deep developments in the space. And one of them, I would say, over the last sort of 2 years is actually the evolution of more serious players, builders, use cases within crypto Web3 as well. I mean, we all know that there's probably 70-80% of just speculative stuff out in crypto, and as the space matures, we hope to sort of see a lot more real use case focused serious applications coming up. And I think that's something which has which sort of over the last year has helped in many ways. So we need these cycles in the space as such to kind of sift through and remove all the noise. So Arna is a DeFi asset management platform, as you said. I looked at sort of my introduction to DeFi was around 3 years back, and I was looking at building my next startup. Having built a consumer foods startup, very different world back in India in the last decade. And I was keen to look at something which is sort of, again, plays to my strengths in understanding consumers, users, and in the financial services world. That's when I realized that DeFi is so foundational. There is so much that can be done to democratize access, build really, important sort of structured products that give users the ability to participate in this new evolving asset class. And it's great that in the last 1 year we've seen the class sort of almost doubling now. It's not the end of the dips. I'm sure there's going to be more volatility in the space as we move ahead, but we know the sort of the trend, the long-term trend of this asset class and what's happening. But I realized that this space had several challenges for wider adoption. You look at the UX, it was extremely clunky, the level of fragmentation very high. So if anybody wanted to actually get into crypto as a user, as an investor in any form, you had to go to 20 different places, or like Deryck mentioned, from an institutional perspective, just do Bitcoin and Ethereum. And that's not it's the most foundational part of crypto, but really all the value will be built with applications that are going to come forward. So I saw that the level of fragmentation was very high. The intelligence information was completely unorganized in many ways, and even if it was there, you needed to be a full-time player, a full-time trader to be in the space, as opposed to someone who can really participate in it from, in a more responsible way by accessing a platform. And of course, the overall dimension of trust. There was just too many factors which contributed to a lack of trust, as opposed to trust evolving in this trustless architecture. So when I looked at that, I clearly saw that here is an opportunity to build native, decentralized, on-chain asset management platform built on the architecture of decentralization, being trustless, being permissionless, and something that helped users manage their entire crypto or digital assets wealth lifecycle. So that's when I started looking at how we could build Arna as a DeFi asset management platform. Realized that, without getting into too many details, that to do that we needed to build an infrastructure side to it, which would organize the intelligence, the expertise, the manufacturing, and then be the other part of the infrastructure, which would really leverage the technology to be able to tokenize all of that, the insights, the information, the strategy. So I use that tokenization infrastructure, and then finally abstract all of this away and provide users a very sophisticated but simple to use application or app where they can access the entire digital assets space. So that's how Arna evolved, and over the last more than a year we've been building that, and we launched the beta around 3 months back. It's a 3-phase beta. The first 2 phases are through, and we're on to launching the final stage of the beta in January, where we actually launch the R5 vaults, or the crypto structured products.
Wow, that's brilliant. Again, Sri, hearty congratulations, because I think from vision to fruition of your vision and making that live is a 2-year journey, and you build this from ground up, right? You had a vision that you described loosely to me when we met the first time, and I met you again in India Blockchain Week. We spend quality time in understanding your protocol. I believe you've leveraged not just the underlying decentralized infrastructure, the tokenized asset infrastructure on top of that, but you also have leveraged some of the intelligence gathering using AI and machine learning, and providing that, feeding into the asset valuation mechanism, giving a bit more intelligent touch to it. And so the way I have understood Arna is, I've always, I think Deryck will attest to it, compared the industry into, you have layer 1, layer 2, which we've discussed this, as a foundational layer. And then you begin to see layer 3, the likes of Aave and the likes of, stable coins, which are application services. And where things become really interesting is layer 4, which is where I look into liquidity protocols and yield farming protocols, who are leveraging the underlying layers to find and squeeze every little bit of value. So is it fair then, Sri, to compare Arna protocol as a layer 4 protocol that's leveraging and sitting upon all these sort of value layers underneath the covers to provide that optimization using intelligent, from data, using the access, which is where I think you talk about liquidity fragmentation leading to inefficient use of capital. You're trying to sort of solve some of those core problems to give user a singular interface to make sense of all the underlying protocols without actually having to know the details of what the protocols are. Is that a right way to characterize this?
Yeah, I think, Nitin, I think that would be certainly one of the ways of sort of wrapping up how this layer 4 itself is building on all the infrastructure layers, and not just the infrastructure layers. What's happened is in layer 3, we've got very niche specialized protocols building, say, different dimensions of DeFi, but that inherently by design that leads to fragmentation. So you really need something on top. So yes, our Arna is designed to be that layer 4 on top. And just to give an analogy from legacy TradFi financial markets, we need to do a Schwab to crypto. Whatever happened 40 years back in the equity space, as Schwab came in, disintermediated, brought in technology, brought down costs. They came to be known as a discount brokerage, but they did a lot more actually to provide easy access and democratize equities. Similarly, Arna is designed to be the decentralized Schwab of Web3, and I think we need to build a responsible platform which gives users real access to this space, and through this platform sitting on top.
Yeah, so I think, Deryck, we should reach out to Charles Schwab as a sponsorship, because I think Sri gave a plug. Sri gave a plug in to what Schwab did for traditional finance. Arna will do for decentralized finance. So I'm reaching out to Charles Schwab. If they're listening to this, we are open for sponsorships, for the podcast. But point taken, Sri. Deryck, do you have any questions for Sri?
Yeah, absolutely. Sri, we always talk about the fact that we as fund managers ultimately know that if this industry is going to continue the way we envisage it to be, our existing structures should be disintermediated. They should be disintermediated. And the reason why is because, with the decentralized finance and the ability for people to express their capabilities and their skill sets in the form of managing and strategizing money, why not build that into an autonomous organization, or a DAO, a decentralized autonomous organization? And we believe in that. And so accordingly, we've kept our eye on that the whole time, which intrigues us about what you're doing, etc. along the way. We've looked at early stage sort of software as service providers in a web environment, where they have created these little environments where people can follow and invest behind a trend, behind a particular investor that is investing, and his investments are shown and his or her performance are shown, and therefore someone says, yep, I'll invest in that, and they put some money into it. Now, probably the first time I saw that was nearly 4 years ago, I guess. And the amounts of money there were very, very small, and the profile of the site was very small. And I think part of the reason for that was around regulation. So I'm keen to hear how you envisage the more DAO-orientated environment to be able to cope with regulations, and not just regulations in one country, but the diversity of regulations right across the world, because you're going to get global investors into this space and into your solution.
Yeah, absolutely. Deryck, you touched on the right point. I think if there are two headwinds and at the same time two vectors which can really propel DeFi into mainstream, one is regulation, the other is security. I think these are the two dimensions which need to evolve and can either prove to be a sort of a big hurdle or actually become enabling. So, being an entrepreneur and someone who is sort of deeply invested in this space, so I'm very optimistic that yes, there will be of course sort of short-term challenges as regulation evolves, but I think regulation will evolve in an enabling way in the longer term for this space, and it is important to build the credibility, the legitimacy, and for wider adoption in many ways. So I think the way platforms like Arna and others are designed, developed, will evolve over time as regulation evolves. And we are designed in a way where we are a platform. We kind of aggregate. And you spoke about how a DAO platform can be used for decentralized creation of products and ideas. I think we are also built. The first part of our tokenization infrastructure is this platform, which is actually a DAO platform for organizing both human expertise and for utilizing AI in the architecture of how we look at blockchain transaction data, social sentiment, and featurize that. So all of this is going to come together. But as the regulatory environment in different, at least major markets, major financial markets, major geographies becomes clearer, platforms will need to be agile, be close to that, and sort of keep evolving, work closely to at one end be compliant and be structured in a way so that they're able to clearly remain within the realms of suitable regulation, and at the same time yet remain true to the ethos of decentralization. I think both that balance is important. So that's where I think that conflict will come, but it's about sort of evolving the right architecture and design and how one builds a decentralized platform like this.
Yeah. So Shri, let me double click on security, right? And especially in light of the recent ledger and this eternal debate we've had in terms of custodial versus non-custodial wallets. I'm sure being in DeFi, asset management platform, you're dealing with some of the elements of financial primitives. You're engaging in some level of locking of an asset, which is collateralization. There's lending activity happening, and you're sitting on top and figuring out as to how do you optimize all those things. If I have, let's say, X or a type of assets, what can I do in terms of maximizing the yield? So I have to engage in these primitives, and I find Arna as a gateway to engage in that whole element. How do you sort of view security? Because security has always been, as you mentioned, because of poor UI UX, I think one of the reasons that's contributing to these clunky challenges, as you rightly pointed out. How are you, one, viewing it, and what are your broad brush sort of principles that you're going after to ensuring that if I'm engaging with Arna, some aspects of, yes, I need to be educated, I need to understand this because now I'm taking the control on this, of the protocol, but also how do you ensure security of assets?
Yeah, I think that's one of the sort of, as a responsible platform, one has to be always very close to the dimension of security. And I had sort of written about it as well earlier, on some of the vectors that are absolutely important for wider adoption. security is at sort of different levels. Clearly, one is at the larger infrastructure, the layer 1, 2, 3, so at that level. And if you look at the Ledger Connect issue that happens and many of the sort of applications will depend upon security infrastructure to build. And when breaches happen there, then it's sort of something which is outside the control of applications, and it is a challenge. So I hope the industry sort of at a infrastructure level really starts evolving more robust security standards in some form. I mean, if you look at how the Ledger Connect breach happened, at some level, it's quite shocking to be honest. That it could happen through an ex-employee's device. I mean, and for a hardcore security company.
I agree.
So I think that's a challenge. But at the same time, I think applications, dApps, protocol really need to be always thinking about what needs to be done from a security perspective. Of course, all the usuals. What shall I say? The usual best practices in terms of security audits, regular security audits, and revisiting them. Those are vital for anybody who's in the smart contracts area, your tokenization platforms, and we've gone through extensive third-party security audits, of course, and will continue to do so as we move ahead. But it remains a challenge, and I don't have a sort of clear answer to that. But I'm sure at both these levels, at the application levels, builders have to be very very careful and not just leave this responsibility to the infrastructure levels. I mean, one has to actively invest in the security side, and at the same time, I hope from an industry perspective, we really take to 2024. Significant focus should be around security in smart contracts. I mean, we've seen the quantum of and the number of hacks that have happened in the space is actually it's a huge barrier for everything that the good that can happen in the space.
I agree.
Yeah, it's very true.
Absolutely, and I think if you look at the future of tokenized, go ahead, Deryck.
Oh no, go ahead, Nitin.
Yeah, I was just, opining on this, Sri, just to agree and having a sort of an agreement on this, where the future of tokenized funds and financial services rely upon this. I mean, there's one thing which I've always said, that blockchain and DLT solve the issue of time and trust is that component that when I deposit money and I'm making a trade, there's a certain level of trust I have with the financial institutions that I interact with. And yes, I'm paying a fee, and yes, I complain about it, it's clunky. And if DeFi protocols is meant to solve and replace that interface, it has to be better, if not provide an equivalent level of trust of the existing financial institutions. So I do tend to agree that as we tokenize funds, and Deryck and me have talked, Deryck's vision early on with Portal Asset Management itself was to tokenize the fund to disintermediate ourselves as a fund managers. And so I think that's where your points are well taken, and I believe we collectively as an industry need to solve that, whether we're doing this from a structural perspective or technology perspective or both, so to speak.
So can I make one statement there? We don't want to disintermediate ourselves as a fund manager. We want to disintermediate the system so that we don't have all that burden associated with the onboarding, costs, administration, etc. of a fund. And why I say that is that your system and others are envisaging our skill sets to be able to be utilised in a DAO, a decentralised autonomous organisation, without all of the infrastructure that goes in it. That's what I'd like to ultimately see. So the skill set is leveraged on a global basis, and the distribution friction associated with being able to be onboarded and invested is disintermediated. And that's certainly a goal going forward. I've got a couple of comments on the need and the aspect of security and how important it is. One of them is just an observation over the last 5 years, and that is that this space, I've often said this space is a little bit like Darwinism on steroids. And that is, a hack occurs, a collapse occurs, money value is stolen, very often is found blocked or returned, which is intriguing. But nonetheless, a hack occurs. Well, the next thing that happens there is a patch occurs, or that system dies, and another one learns from it rapidly and grows. Now, when you compare our existing financial system with that, a bank collapse occurs, an enormous amount of regulation comes out, and 10 years later, another banking crisis occurs. And it's done so for years and years and years. The regulations are band-aids on band-aids on band-aids to try and resolve a system, which in actual fact is fundamentally, challenged by virtue of the banking requirements to have a certain amount of money sitting in bonds, and that amount of money can be mismanaged over a period of time. Market interest rates can rapidly change. The bank can find itself in a deficit of assets, and a bank run can occur very quickly, destroying the bank. That same system is still in place, and that's happening every decade. You see that happening, and so yes, this area is attacked, but from those attacks, the fixes occur very quickly. And that's what's so impressive about this space. This space will have longevity and strength, I think, above the existing infrastructure. One comment. And another is that, if you're looking at the ultimate position here, where a DAO might be able to do something that's very common for everyone, a decentralized autonomous organization manages digitized real estate assets, very common investment, and that is then enabled globally. You can, and investors from any country can invest very small amounts of money into it. You really are seeing massive disruption to the existing unit trust systems that are listed on exchanges or private unit trusts, etc. And I think that is true democratization of investment, and I think that's a wonderful thing, and I really believe that is going to be the future of DeFi, and so disruptive, but in a really positive manner. What do you think, Sri?
Yeah, no, I'm totally with you on that, Deryck. And the DAO platform, for example, we're essentially a platform as a DeFi asset managed platform. We're not only looking at democratizing access for users at one end, it's about providing a platform for experts like fund managers like yourselves or data scientists to really come on the DAO and leverage your expertise to create alpha or structured products, which can be then tokenized on the Arna tokenization platform. So that is really true decentralization of the entire alpha value chain. So our mission at Arna is to decentralize the alpha value chain, and that starts with the at the beginning itself. So it's not about creating a centralized entity with hundreds of fund managers and data scientists all working in a centralized entity, but really creating the platform for experts, fund managers, for data scientists to come together, work. Yes. In a collaborative form and create the alpha ideas or structured products, and that comes through a very decentralized process, and then really take that expertise and leverage that expertise to provide democratized access to many users who can access that now. So I think that's how I look at it in terms of the entire protocol, the way we've designed, and totally with you in terms of how the vision for Arna DAO and how it should evolve on one end of the side.
Sri, you've been the perfect guest
I think we could talk for hours.
For this area. We'll give Nitin his last question, but you've been a perfect guest for us today because you're talking about the vision of investment into this space and the vision of decentralized finance playing a really major role in global investment. And I think that's a fabulous way of capping 2023. Nitin, your last question.
Yeah, I think we certainly have a lag here, but I think we could talk for hours. But Sri, as a builder and as an innovator, love to get your views on future as these protocols evolve in your terms, and the intersection of regulation evolving business models, because what you're prescribing is really evolution of business models too, right? And the tech. A lot of tech needs to develop and evolve, whether it's UX or whether it's entry point. And to get to where you are, the sophistication that you bring, you need to have some entry points that make life easier, whether it's walleting structures, whether it's UI, UX, ensuring with certain level of granularity and security. So love to get your sort of closing thoughts on risk and opportunities as you see this industry evolve, and how can Arna play a pivotal role to bring this to common people, like to even today in traditional finance. I don't think people fully understand the gravity of difference between wealth managers, asset managers, investment managers. It's all different terms they use, and you're trying to simplify those things from a simple investment objective perspective, right? So love to get your sort of summary of thoughts in that context.
So I think there's just too much packed into that loaded question. And it's a hard problem, and we've all seen how sort of legacy financial markets have kept out more people than included them. We've seen value gravitate towards the 1% consistently, and even the buoyant upper middle classes, which were always a core part of the meritocratic societies, have in many ways been at the receiving end of not having access to high quality products and financial opportunities, because wealth is not just created from hard work, it's also built on how one is able to sort of invest and build the wealth created from hard work itself. It's the financialization of it. I think that's where if we can really leverage what it brings to the table in terms of democratizing the creation of complex products but simplifying the access to it, democratizing the access to it, I think then we would be able to really move the needle forward in that sense. And I think that's what we are endeavoring, taking the first steps at Arna, to really provide a platform to connect essentially users at one end and really experts and creators at the other end, and build that new financial system as such. I think that's how I would put it, and it's definitely a big problem. It's a challenge, and I think there will be a significant evolution of how this model evolves over time. I think we've got the first V1 ready and out there, and we'll continuously build on that and sort of learn from the other developments in the ecosystem that's also taking place in parallel.
So thank you very much indeed, and thank you for joining us for the last show of 2023. The year we look upon now as a year of real turnaround for both the industry as developers, for the regulations that have gone into place, and for those that are keen to see this industry move forward now that the remainder of what used to be considered to be the opposition to this industry, which is the institutions, are investing in the industry, supporting it, building around it. Forward-looking governments, I would define them as, are looking at and have put positive regulations in. We're excited about 2024 going forward. And because none of us here, and I think very few of the listeners, are what Nitin would define as crypto tourists, and many of them here dedicated to this space, I would welcome you to come along next year and join us and listen to what we see as each month, each week occurs in the 52 weeks of 2024. A huge thank you to both a whole variety of our guests that we've had through the year, been fabulous contributors to the narrative and to our understanding, to our education, and hopefully to the audience education. A giant thank you to the audience who have been so interested and dedicated to this. We've seen the audience as we've toured around the place and gone and attended conferences come up to us and say, we really enjoy your show and how you view this. That's inspiring to us. And of course, a thank you to my partner in this show, and that is Nitin Gaur. Thank you so much, Nitin.
Thank you, Deryck. And I reciprocate, and I echo those sentiments as well. It's always gratifying when people come up to you in conference and say, hey, I loved your podcast, and continue to do the work and provide the feedback. And Sri, again, thanks for highlighting the 2023 for us, being the last guest on the last podcast rather. And looking forward to an exceptional 2024, looking forward to an exceptional success of Arna Protocol in 2024.
Thank you. Thanks, Nitin.
Very good.
Thanks, Deryck. And I'll just add on to that. 2024 is going to be about accelerating decentralization. So all in on that.
Yeah.
Wonderful. So over this period of time for the Christmas break, we will be back doing our first recording on the 16th of January, and that'll go live on the 19th of January. And so in the meantime, we'll put on some of our greatest hits for 2023, some of the more popular, or the most popular of our various podcasts, and you can enjoy that over the Christmas break. Look after yourselves, be at peace, and have a wonderful time with your families over this Christmas break. Bye for now.
Bye, guys.
Thank you. Thank you.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin, Gaur, or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.